PHILLIPS Carbon Black is one of those few companies who have been in news for all good reasons in the recent past. Its share price had a great run starting from COVID low of 63 reaching up to 272 in July 21 and after subsequent corrections reached 220, a growth of over 250% or addition of rupees 157 to the base price of 63. Very solid jump, consistent movement and sizable increase. The rally in the share price of the company was driven mainly by the performance figures reported during the last 4 quarters. The TTM EBITDA reached a lifetime high of 719 crores for the quarter ended September 21, and during the same period, because of the product mix improvement, EBITDA yield per ton reached a peak of almost 16,000 and the market recognized the potential and also the performance. I am Vittal Prabhu bringing you the weekly video on Stock Learning Simplified. Hope you will find the video interesting and useful. By virtue of its installed capacity of 6,03,000 tons per annum, PHILLIPS Carbon Black ranks ahead of Birla, Himadri and BK Tires and remains in the forefront as the largest carbon black manufacturer of the country. The company started operations in 1960 in association with the PHILLIPS Petroleum, a US company. Two main products, carbon black and specialty black, a byproduct of green power generated from the production process of carbon black. Domestic market, it has got 35% share and exports 26% of its output. It has got a unique achievement of obtaining US FDA approval for specialty grade carbon black for food applications. In the world, it ranks number 7 and in India is at the top. Company has a strong product mix. Tire carbon black forming 62%, where carbon black is used as a reinforcing filler material. As a performance chemical, it contributes 28%. Used in hoses, conveyors, injection molding and extruded profiles. As a specialty chemical, it contributes 10% of the product mix used in inks, paints, batteries, cables and fibers. When it comes to EBITDA per ton, the first two categories have EBITDA up to 15,000, whereas for specialty chemical, EBITDA is more than double at rupees 40,000. Two reasons for the same. Specialty chemical has got a major export market, and second, locally it caters to a niche market. For PHILLIPS Carbon, it is leadership with strategic location of Durgapur, Kochi, Palej and Mundra. The strategic location gives it the advantage of logistical costs both within the country and outside. Its brownfield expansion in Mundra, which is going for addition of specialty 40,000 tons per annum at a cost of 320 crores. New unit being set up along with green power in Tamil Nadu for 147,000 tons per annum at a cost of 800 crores. Investment of over 1,100 crores being funded by equity and internal accruals, talks of the financial muscle the company has got. Awaiting economic recovery and recovery in the tire segment, the company has got its priorities right by focusing on enhancement of installed capacity in terms of new plant in Tamil Nadu and expansion in Mundra. The generic segment going up to 678,000 tons per annum, while the specialty is moving because of Mundra expansion from 72 to 112, on the whole from 603 to 790. Also going up is the power portfolio because of the Tamil Nadu unit adding 24 megawatts to the existing 84 megawatts, and as a result of all this expansion, brownfield and greenfield, the capacity is growing, and once the capacity grows to its brim, profits can follow and follow in a big way. Future for carbon black segment appears brighter because of the awaited economic revival which is picking up, and also the recovery in the auto sector and the transportation segment, accompanied by governmental policy on imports in terms of anti-dumping duties on China imports. We cannot ignore at the same time the implications of crude prices on the overall cost structure. Taking all facts together, we can look forward to a brighter future for carbon black. What comes out from a review of last 6 years financials is that notwithstanding the impact of COVID for FY20 and FY21, the company has remained strong in its PAT percentage at 11.7% and EBITDA percentage at 19.5%, which have remained all-time highs. This reflects the quality, growth, and perfect financial health. The company has strong operating cash flows going up to a maximum of about 500 crores, which have provided for absorbing the working capital changes and payment of dividend. They have given adequate surplus to have funding of capital expenditure from the internal generations as flowback. Company's equities have grown at a CAGR of 13% over a 5-year period. It had made use of financial leverage to a minimum extent with a debt of around 1/3 of the equity. That way the balance sheet becomes very healthy with limited leverage, and the company has been able to use the equity for funding of capex. And with efficient operation of assets and strong operating leverage, the company has been able to generate a return on capital employed, which is quite decent at 17%. The market capitalization of the company at 4,341 has got a CAGR of 30% over a 5-year period, and its reasonableness is established by PE ratio of 9.1, which compares well with the sectoral PE. Also, the enterprise value multiplier of 1.8, along with the operational cash flow yield of around 14%. The shareholding pattern of the company is quite strong, with the promoters holding above 50%. FIIs and FPIs having raised it from 10% to 12% between 4 quarters. Similarly, mutual funds raising it from 1.4 to 4.7. DIIs keep at around 1.2, and retail and others is 31%. Company had a QIP done in October, and as a result there was a dilution in the holding of promoters and retails and others, and there was no divestment by any of the parties. Incidentally, the company is changing its name to PCBL Limited to reflect the name as widely known in the market. A look at the price action data for the past 3 months in respect of the share suggests the average price slightly fell, and at the same time the quantity involved was showing a rise. And when it comes to order size and delivery percentage, what is observed is delivery percentage registered a substantial increase, and the quantity per trade was on the lower side. These observations sum up the situation like the price fall was supported by quantity, but the entire movement was driven not by speculators but by small sized investors, which is good for the share. For over a year, starting from August 2020 till October 2021, the share price has remained above 200 EMA. Only from the middle of October it has touched 200 EMA and has taken strong support therefrom. The price also derives support from the Fibonacci level of 61.8%, which incidentally is at rupees 227, and the level to follow next is 78.6 at rupees 250 in the event of an upward movement. A change in direction midway is observed in respect of daily stochastic RSI. Bullishness is inferred from the placement and direction of the crossover of MACD. OBV indicates continuation of the sideways movement. Although there is a downward pressure, neck formation for a decisive movement might take longer than expected. PHILLIPS Carbon Black, pioneer since 1960, 7th in the world, number 1 within the country, state-of-the-art plants, all strategically located, logistical advantage, cash flow strong, robust from operations year on year, expansion based on flowback of profits with ROCE at decent 17%, share movement consistent, strong and ascending, very positive. Building capacity ahead of economic revival is a strong strategy. A company with 3 major points: strong plants, solid product mix and market edge. Hope you liked the presentation. You can access similar videos with rich content at InfoCard on Stock Learning Simplified. We look forward to your likes, shares and comments. If you are visiting the channel for the first time, may please subscribe to the channel and press the bell icon for timely intimation on our forthcoming videos. We thank you so much for your time, support and interest. Disclaimer: this video is for purposes of information, education and awareness only. This is not meant to be a solicitation or recommendation to buy, sell or hold securities. Based on your requirement, please seek applicable advice of a competent professional.